So let's get right to the floor show and the man behind the DRAM ETF, Roundhill Investments CEO Dave Mazza. Dave, DRAM, which for those of you who don't know, because we don't just assume, everybody knows, stands for Dynamic Random Access Memory. It's needed to hold and store data in everything from smartphones and laptops to, yes, data centers. It has been one of the best trades in the market. What leads you to believe that continues?
Well, it's interesting. So we know that since we launched DRAM, it's up nearly 150%. And one of the reasons for that is that investors are recognizing the supply and demand imbalance that we're seeing with memory chips themselves. So the market is chronically undersupplied and demand for memory chips has exploded. To your point, memory's everywhere. It's in smart TVs, it's in your car, it's in your smartphone. But what's really changed is in this data center build out with the $1 trillion of CapEx that's going to build data centers. Well, where does that go? It actually goes into chips, but not just the high-powered NVIDIA chips. What it needs, those chips need to work is actually memory chips. So chips that are made by Micron, Samsung, SK Hynix. And that's one of the reasons why we're now seeing a sea change when it comes to the valuation multiples of these companies. Historically, they traded at incredibly low multiples, and we're just beginning to see that change as investors embrace and see how the demand for memory chips themselves is going to support the stock prices of the companies that make them.
Everybody's been talking about how the AI infrastructure build-out is desperate for chips, but you're in essence saying that the AI workloads are memory-bound, not necessarily compute-bound. So you believe that this has a longer tail. I mean, if you look at, say, for example, NVIDIA, and we just had a guest in Charles's show a minute ago who said, I believe he said he's exiting Marvell. Some of these chip makers have had great run-ups, but so have the memory names. So why wouldn't you treat those the same and maybe take some profits?
Yeah, no, it's interesting. And look, the performance has gone a bit parabolic, so I will certainly recognize that. But this is what we believe to be a longer-term cycle where the investors begin to change how they actually view memory chip makers themselves. Memory historically was a real boom bust, an incredibly cyclical sector where there would be, exactly, it became commoditized. But with this AI data center build out, and every generation of NVIDIA chip, AMD chip, as they get more and more powerful, they need more and more memory to work well. It's sort of like a kitchen. If you think about the GPU, these high-powered chips as the head chef, the best head chef in the world can't cook anything if they don't have the ingredients. And that's actually where the memory chips come into play. They serve the ingredients that feed into the AI models.
I was also, as we broaden this conversation, because the markets, but for today, have been hitting record after record after record, I was looking at the Roundhill ETF leaders, the ones that have done the best year to date. And they include the meme stock ETF, interesting, generative AI technology, that makes sense, robotics ETF. Those have had very, very nice gains year to date. And then if you flip it over, because we got to show what isn't working as well, Dave, and we've got the covered calls for Ether, Bitcoin and the crypto names have just been hammered, obviously. And by the way, I believe Bitcoin's down again today. The China Magnificent 7 ETF and your video games ETF. Can I just ask you, we are barreling toward this SpaceX IPO next week. And now Elon Musk and company are indicating that it will be $135 a share when it comes out next week, and they plan to raise 75 million. And as we continue to look at that, the Mars ETF, 25 billion rather, the Mars ETF that you have, that one is the space company group. They've been doing really well, and then suddenly they've gotten a little squirrely. What do you see there, and what are some of the names in that?
Yeah, no, it's interesting. So with the SpaceX IPO coming, I think it's really legitimized the space sector, the space industry. But what's really important about space stocks is that they're very different. We get excited about rocket launches and going to Mars, going to the moon, what have you. But the space economy is incredibly important for communications. All the imagery we see from the Strait of Hormuz, that's coming from satellite companies that actually are launching satellites into space that allow for greater and more efficient communication. As the world gets more connected, more digitized, you need the ability to communicate more effectively, and that's where space comes into play. So the companies that are involved with this, include a company like Rocket Labs, ASTS, and to your point, These have been on an incredible run, a lot of it due to the fact that SpaceX is coming. More recently, we've seen a bit of a bump in the road, maybe some profit taking, especially on days where sentiment sours. But again, this is a theme that longer term we think is less futuristic and actually very much here and now.
Yeah, the satellite component of this is a real reality, especially considering that that's the big money maker for such an exciting